You know kan, they say you need to pay some kind of interest when buying an undercon property.
Is it? What's up everybody, welcome to VC. My name is Vincent.
And I'm Chloe.
Many property buyers actually have no idea about the progressive interest. So what exactly is progressive interest?
So progressive interest is the interest you'll need to pay on these stage-by-stage payments which have been released by the banks until the vacant possession, which is when you get your keys.
So now buying a property that's under construction is one of the best way to get a great deal. It is because when you buy a unit that in an early phase of the project, you get a greater price. After the next phase is launched, the price usually go up to 15% or 30% or even more.
Damn. What? Nevertheless, it is a little bit different from buying a property that is already completely built. So if you're buying a property from the primary market and is still under construction, you actually don't have to pay for your full monthly installment amount. Well, here most of you thought that you don't have to pay for anything, but you're wrong.
So when you buy a property that is under construction, you are supposed to pay something called progressive interest.
Then why do we have to pay for progressive interest? So firstly, we have to understand the process first. So there are three parties involved, including you, the developer, and the bank. So now imagine you're going to buy a property that is still under construction from the developer. So when you buy the property, you're going to take a loan. So considering borrowing money from the bank so you can buy the property from the developer, kan? So the developer will be getting the money from their financier bank to pay for the construction. So if the construction stage is at 40%, then the bank has paid 40% on behalf of you to the developer. But you have to pay the interest that occurs. And this is known as progressive interest.
So easy to understand that the banks are in the business of lending money. Note that the interest paid will not be deducted from your overall interest, which basically not even your principal. That's where financial institution earns as part of their profit.
Yep.
So after you buy a property with 10% down payment is settled, the remaining 90% will be paid by the bank directly to the developer while you are getting a loan to pay that 90% by monthly installment. However, bank won't disperse the 90% money in one shot to developer. They can only release it based on their progress.
So in residential titles, the progress schedule will be based on a schedule called Schedule H. So based on this Schedule H, you will see that there are different types of payments that need to be made to the developer depending on the stage of the development's construction.
Now here is an example of a progress schedule that you can take a look. Here you will see starting from signing from your sales and purchase agreement, then the various completion stages of the development, the practical completion, and the occupancy certificate.
A simplified version will look like this, where after the buyer signs the SPA, developer can claim 10% from the bank. So from there to stage 2, which includes like piling, framework, wall, wiring, plastering, sewerage, drain, roads, practical completion, and occupancy, then it will be completed. Ta-da!
That's a lot of progress.
So some of you may ask, how do you count progressive interest? The formula of progressive interest will be the sales and purchase agreement price of your property multiplied by the progress completion stage, then multiplied by the bank interest, then divided by 365 days and multiplied by the number of days of the month. Sounds complicated.
Yeah, but let's take an example of a property price at 500,000. The progress of the property now is 35%, so we are gonna count the progressive interest for February. So with 500,000 multiplied by 35%, then multiplied with the 3% interest rate, which is the average interest rate now at 2021, then divided by 365 days. Since February has 28 days, we multiply by 28 days. Your progressive interest for that month will be 402 ringgit 70 cents.
So if you're wondering if you can calculate the whole progressive interest, then the answer will be no, as we can't exactly count the accurate amount of progressive interest that we will be paying because there are too many different types of factors that will affect the progressive interest. So for example, if you're buying a higher floor or a lower floor, it makes a difference too. So bank interest also is. and even natural disasters that will cause delays to the progress. For example, if there's a COVID case outbreak that causes construction sites to be not able to work for 2 months and the progress is at 35%, means you'll be paying 35% of progressive interest for the next 2 months.
So nevertheless, as what we said before, buying a project development, you get an early bird price compared to buying from the secondary market and as known as the sub-sale market. Or if you were to wait till the property is completed, then you will not able to enjoy the extra cheaper price or even get to choose your own preferable floor, your unit number or view, as you are limited to few leftover units only. If you are still contemplating, you want to know the difference between buying a project development or whether it is still under construction or completed, and buying a sub-sale property, we have actually made a video about that comparison between project development versus the sub-sale property. So click there to have a watch later on. We also link it down below just in case you missed it. If you learned anything so far, please give this video a like. It will mean a lot to us. So thank you very much.
So just for your information, banks will release the loan by stages guarded by the Housing Development Act to the developer. So take note that HDA is to protect the buyers from developers abandoning their project or scamming the buyers. So banks can't just simply directly pay 90% to the developer, as it is dangerous, as the developer can directly run away.
Now, if you are wondering how they determine whether they have completed the stage or not, to claim the money from the bank, developers will have to get a certified approval by the project architect certifying the progress of the work parcel. So here comes the end of the video, everybody. Thank you for watching. If you want to know more about the real estate in Malaysia, considering subscribe and we will have more video like this. Now, we will see you
in the next
video. Ciao.